Hi, I'm Daniel Dobbs, Sales Manager and Loan Officer at HighTechLending in Newport Beach, and I'll be your host for today's webinar, Surviving the Mortgage Crisis, an Agent's Guide to Current Lending Practices. If you're listening to the sound of my voice, there's a reason for it. It means, like myself, you're probably one of the few old-time survivors left. It's my humble opinion that we will only continue to survive by going back to the lending basics that were so prevalent in the 90s, and to take this new technology of the internet and email and integrate it into our marketing efforts. If you find this webinar of value, I'll be hosting others in the very near future and posting them on our website. Just simply log on to HighTechLending.com, point and click on this portion of the site, and you'll be able to gain access. Are you considering changing offices or loan companies? If so, please give me 20 seconds to pitch HighTechLending to you. We offer 100% commission, minus the transaction fee. There is no real estate license required, and for those agents who also would like to sell real estate and originate loans, there is no need to transfer your license from your current broker. Also, because we're a mortgage banker, there is no yield spread premium disclosure required, and we have direct endorsement underwriters on staff. That means fast closings and quick paydays. You'll have access to all types of mortgages. There's no expensive software to buy. You have paperless and automated underwriting, which allows you to offer a point-of-sale loan approval. You can work from your home or from our Newport Beach office. We have a very relaxed office environment. And you have full access to medical and dental insurance. For more information on what we have to offer, you can simply log on to our website at HighTechLending.com. Point and click on this portion of our website, and you can download an employment package for your review. Then simply give me a call, and we can go over any marketing ideas or other issues that you might have before you would come on board. Today's objectives. I want to bring you current on what's happening in today's mortgage market, what's affecting interest rates, and how to predict when they will change. We'll outline the different loan options for conventional financing, and then we'll show you how to create deals using FHA loans. Well, obviously, with the advent of the new real estate market taking hold starting in July of 2007, when the lending crisis was officially announced, there are going to be some changes in lending. No longer will we be lending to borrowers who have no job, have no income, have no savings, have no real credit to speak of, and hopefully the people at those large national lenders that brought us these crazy loans will sue me in the big house. Here are a list of conventional loan programs that are still available in today's lending market. In addition to lenders tightening up on credit scoring and credit standards, they are also tightening up on the documentation that your borrower will have to provide to prove income. Also, they are looking for expenses that might reduce that income and further increase their risk of getting the home back in foreclosure. Here are a list of the required documents that your borrower will be required to provide. I'm not an economist, and probably neither are you, but the people who buy Treasury bills are. And here are some of the factors they consider when loaning money for 30 years on a bond. There are several factors that impact a borrower's interest rate. Here are the most notable, particularly credit scores. If a borrower has lower than a 660 credit score, they may not be able to obtain financing at all. The other major factors in determining the interest rate you pay on a mortgage is your down payment or your equity position in the case of a refi. Also, if you have mortgage insurance, the less you put down, the higher the mortgage insurance will be, either on a monthly basis or an upfront cost. Also, lenders charge higher rates for a cash-out refinance than a rate-and-term refi. And of course, the conforming and jumbo loan limits will have a big impact on whether your loan is at the lower conforming rate or the higher jumbo rate. No one can predict what rates will do in the future. We can only predict trends. In fact, if I could predict exactly what rates we're doing, I wouldn't be doing this webinar right now. I would be in Monaco at the roulette wheel with a martini in my hand and a blonde on my arm. But given that, here are the monthly reports that come out that will alter rates either positively or negatively. You can obtain a calendar of these events from an informational service or the Wall Street Journal. Since I'm not an economist, I use a forecasting service, MarketAlert.com. For 20 years, I've known CEO and founder Larry Baer. I have found his service to be the most accurate predictor of future market trends. And most impressive is Larry personally answers calls throughout the trading day and explains in detail why rates are trending up or down. You can receive a 15-day free trial by simply logging on to MarketAlert.com or give Larry a call for a brief consultation. Have a pen and paper ready. Larry is an experienced market forecaster, and the information he provides is critical to your success. Now let's move on to the next part of the webinar, working with the borrower. Whether you are a real estate agent or a loan officer, you face a significant challenge, working with the borrower. If you have a borrower that makes poor choices when shopping for a loan, it can and will impact your commission check. And here are the biggest mistakes they make. They choose the no-problem lender, the lender that has no problems until about 5 days before escrow closes. Then it becomes everyone's problems. Your borrower believes in free money and online rates. They also believe in honest politicians, military intelligence, and truth in advertising. Borrowers who don't accept referrals from their agent, their family, or their friends because they are so much smarter than the rest of us. Borrowers who apply online and become a victim of phishing or identity theft. Remember, if their files don't close, we don't get paid. Also, borrowers who do not take the time to get underwriter approved because they don't understand their pre-qual letters are worthless. Here's an example of a borrower who's taken time to get their file completely underwritten and approved. And finally, the biggest mistake a borrower makes is not taking time to read the lender's federally mandated disclosures, the good faith estimate, and the truth in lending statements. These are the same people who redeem double coupons at Ralph's, but they just didn't have time to read and understand the disclosures for a $500,000 loan. If you would like to completely understand and therefore protect your borrowers from predatory lending practices, simply log on to ocfisbo.com, point and click on these pages. It will require about 20 minutes of your time, but you will understand the process on a step-by-step basis. Now let's move on to the next portion of the webinar, the benefits of FHA financing. As of January 1st, loan limits for FHA are due to recede to $625,500. The down payment is due to rise from 3% to 3.5%. However, both of these changes, in all likelihood, will be overturned by the next administration in an effort to jumpstart the housing market. In that same effort to jumpstart the housing market, this administration is allocating billions of dollars in block grants and down payment assistance programs to cities and counties for first-time home buyers. And speaking of first-time buyer financing, the Mortgage Assistance Program is probably the leading program that FHA is offering right now. Here are some of the details.